Hi, my name's Wyatt Leonard, and I'm the Business Development Manager for Wholesale Investments at Trilogy Funds. And today I'm joined by Clinton Arentz, who is Head of Lending and Property Development, to discuss the current state of the loan portfolio for the Monthly Income Trust. Now, my first question is in regards to the construction delivery of these loans. Have there been any supply chain disruptions experienced so far?
Hey, good morning, Wyatt. Nice to talk with you again. Well, we're actually seeing supply chains and delivery systems holding up really quite well, given the circumstances. Suppliers we talk to and sub-trades we've been in touch with continue to work through this current process, albeit having usually accepted COVID-19 work practices, which are also adopted on construction site as well as in supply depots and the like. Interestingly, all our consultants have reported that they're operating as usual, remotely, albeit, but operating well. Both valuers and quantity surveyors are able to access sites and continue to do their weekly and monthly checks. So far, so good with respect to supply chain continuance. Wyatt.
And how is the actual construction on these sites progressing?
Well, we looked at that very closely to see if our projects or any of them might be adversely affected. We looked at particular supply lines and builders and sub-trades delivery systems, and so far we're pleased to report very little effect through the portfolio. And in addition, the governments have come forward, both federal and state, to provide support for the construction industry, both with respect to opening up construction sites to longer work hours, but a whole range of other provisions giving construction priority status. So we were pleased to see that. And of course, many of the projects in our portfolio, Wyatt, are smaller projects, infill projects and the like, that are less affected. And in particular, some of the types of projects we do, mainly land subdivisions and completed stock and some smaller commercial projects, are also well placed to work their way through this period with minimal disruption at this stage.
And the next step would obviously be selling that underlying stock. How are these sale rates holding up so far?
Yes, Wyatt, it's a good question. We've looked a lot at that across. We've got sales coming through the system every other day and settlements occurring as a result of that, and therefore repayments. And so far we're seeing that track along quite nicely. Indeed, if anything, people have really risen to the occasion. The solicitors are behind it. The real estate agent community have all adopted virtual practices very quickly, and we're actually seeing good support with respect to both sales rates, and we're seeing settlements of individual purchases are still occurring, albeit with some minor delays here and there, as you might expect in the circumstances.
And are the valuations shifting?
Well, from the evidence we have so far, we've not seen much shift in valuations. That's largely because of the type of project that we normally are attracted to. The smaller projects, near city projects, which have good valuation support. And across our portfolio at this stage, we're pleased to report there's minimal impact with respect to valuations, but it's early days and the market needs to work its way through this period. So we feel our projects are quite well placed at this stage.
And from your point of view, has the lending environment changed significantly as a whole?
Well, it has, Wyatt, but in particular, our team at Fund is well buttressed, both in sectorial and geographic diversity. We're spread across the three states, three primary states being Queensland, New South Wales and Victoria. And of course, our product type is spread between residential apartments and townhouses, also land subdivisions, as I mentioned earlier, smaller construction projects for commercial and industrial. And so it's a nice diversified spread of projects. So at this time, our loan book continues to hold up quite well, we believe. And existing loans are continuing to progress along okay. And of course, our portfolio managers take a great interest in watching that and maintaining close working relationships with each of the borrowers. In addition, we expect to maintain and perhaps increase our competitiveness in the marketplace moving forward. We're seeing a flight to quality from various borrowers seeking strong, more experienced lender groups such as Trilogy. And we believe there's a very good future ahead for our lending model.
And you touched on it briefly there, but how has Trilogy kind of responded to this changing environment?
Well, quickly and effectively, I think, is the short answer. In particular, we all mobilised to our remote operating locations quite quickly, and with new software that exists, that's working extremely efficiently across all three states. We're continuing to see a good flow of quality new loan inquiries, typically from experienced developers and the like. And as the lending market consolidates somewhat over the months ahead, we'd expect to continue to see those quality transactions being presented to us. And as we undertake some of those loans moving forward, we'd hope that with each new loan, we're moving to, strengthen and improve the quality of the underlying loan portfolio.
That's all my questions for today, Clint. Thanks so much for your time. Those insights are really helpful.